at the end of the day, what is money for? Everybody will have a different, list of things that money is for. For me, one of them is bring new things into the world. And I have this sort of entrepreneurial mindset. I love the idea of bringing more movies into the world, bringing more startups into the world, using the security inherent in Bitcoin as a tool to facilitate and lower the risk of new endeavors. That's the thing that gets me really excited.
Today, I'm excited to welcome Jason Scoggins to the podcast. Jason is a Bitcoin advisor, film consultant, repeat founder, and entrepreneur. Welcome to the Bitcoin Edge, Jason.
Thanks so much for having me, Paula. I'm happy to be here.
Yeah, I'm looking forward to chatting with you. Tell us a little bit about yourself first and being in the entertainment industry.
Sure. Well, the broad strokes are I entered professional life as an assistant and got experience on sort of the Hollywood side of Hollywood, a big agency experience, and then was a TV literary agent for a while. That's somebody who represents screenwriters for television. After a couple of years, I left the entertainment business altogether. Moved to Utah with my now wife. I've definitely followed her. Um, and got a bunch of experience sort of as an entrepreneur and just an executive in a bunch of different verticals, everything from healthcare to the events and global sporting event business, which is actually a business. But the bug to be in the entertainment business is something, it's like a virus. It gets inside your brain, inside your blood. And I couldn't let it go. So after several years in Utah, we moved back to Los Angeles and I sort of broke my way back into the entertainment business, again, representing screenwriters and this time directors and on the feature side. But my timing was impeccable in that the writer's strike, the previous writer's strike, happened, within a year of us getting back to LA and getting set up. Long story short, I ended up going down sort of an entrepreneurial path. I started writing a newsletter, which was focused on a really niche part of the entertainment business. But it sort of opened my eyes to the power of data and how having a really good sense of what's happening within a given marketplace can help businesses, help people succeed. And I ended up founding several companies, small ones, like focused on a really sort of each of them had its own small niche thing that it was doing. I was fortunate enough to have those each exit, very modest exits, but the two that I'm most proud of were two companies that I co-founded simultaneously. One was a proper company with a plan. The other was more of a garage band style. Let's see if we can figure out this problem. And a company called Slated, which had been founded I guess, in 2009, 2010, something like that, which is a platform that matches filmmakers and their projects with film financiers. And I worked really closely with the CEO, who was very hands-on the tech side. And once the two companies or the products were sort of integrated into the Slated platform, I turned my attention with a couple of internal colleagues to basically figuring out how independent film finance works and how we could facilitate that within the context of the platform. So one of the through lines, by the way, is sort of thinking about things in terms of systems and sort of eliminating things that I'm really inspired by what Elon's done with all of his companies. But one of the things that he says pretty often is it's important to sort of eliminate the things that don't matter. You don't want to optimize something that shouldn't exist already. And while I haven't had to re-engineer anything or build anything on the scale of what, for example, SpaceX is, to say the least, I'm really inspired by that idea, working backwards from the goal. And so, with film finance in particular, the idea is to raise enough money to make your movie. But how that happens is really intricate in the independent film side. A studio is just going to sort of figuratively write a check and finance an entire film. But on the independent side, it's a cobbled together sort of stack of financing. And while I knew that intellectually, we spent a couple of years figuring that out and sort of re-engineering that for the purposes of Slated. And so after I left Slated, I've mostly been consulting in a couple of different areas, sort of bringing that entertainment industry subject matter expertise, as well as that entrepreneurial spirit, having co-founded or founded several companies. But for the past couple of years, my consulting practice has been a combination of film finance specific related consulting, and then a big piece for the past year has been being an advisor with the Bitcoin Advisor, which is an Australia-based company that is essentially a key agent where we help people set up wallets. We call, most people call them vaults, and specifically the multi-signature aspect to that vault, where you have multiple keys. The Bitcoin advisor is a key holder for our clients, which eliminates a single point of failure if you lose your keys or pass, and you need to sort of make sure that your legacy is passed on to your family. The Bitcoin advisor, provides a really terrific solution, and it's been a real pleasure to be part of that. A big point before I wrap and hand the mic back to you, a big point of that, by the way, is education. The Bitcoin advisor has a huge amount of resources, and we're happy to talk to anybody about what we do, why it matters. But the big thing, like the sort of the mission, is get your Bitcoin off exchanges, at least have a hardware wallet and own your own keys, but optimally set up some part of your stack in a multi-sig situation so that if necessary, you have a fallback position if you need help recovering your Bitcoin.
Yeah, that makes a lot of sense. What brought you to
Excuse me.
Bitcoin?
Ah, well, that's a great question. So the companies that I started had this had a combination of three things. There was a tech element, there was a data element, and there's the entertainment industry itself element. Those three things are sort of the pillars of each of the pieces of those companies that I co-founded or founded. And the point of bringing that up is I've always sort of been interested on the tech side of things. I'm not an engineer or a programmer, but I have sort of that sort of systems oriented mind. Let me put it this way. I have a daughter who's in college, and she's very much a STEM person. I thought I was a STEM person in high school, did very well in all the math, and I got to UCLA and I realized, oh, I am not at all a STEM person. Like, the calculus failed me, and I ended up taking like the easiest physics course. And that's top of mind because my daughter just had a really intense quarter with whatever the last math class you can possibly take as a sophomore in college. And then physics and structural engineer. Anyway, it's a whole thing, and I'm just continually amazed by her ability, but also sort of it has been having me it's been having me think about how my sort of brain works compared to hers. Anyway, I sort of have this affinity for the tech side, but it's not who I am. I'm much more verbal. I'm really good at writing, and part of what I can do well is abstract away the technical concepts so that we can have sort of a layman's conversation about what we're doing within the context of whatever we're trying to achieve. I can sort of translate what the developers are talking about to the stakeholder or the client, all of which sort of leads me to this. So I've been aware of Bitcoin more or less, not literally since it launched, but pretty early. I think I was a fan of Wired magazine back in the day, almost since it launched, and they were covering that space pretty effectively. And I didn't buy any. I was in startup land, we're doing everything on a shoestring, and I don't have a ton of family money. So it wasn't like I had a lot of resources to throw at it, but I was fascinated by it on a technical level. So fast forward to 2017, Bitcoin is more and more a thing, and this is that season where everybody's grandparents were talking about Bitcoin over the Thanksgiving dinner table and over Christmas break, that sort of thing. And during that time, I threw a small amount of money into Bitcoin and some of the other altcoins that were happening at the time, but it was very much at that time kind of a gambling thing. Not so much, maybe not literally gambling, but more of an investment. Let's see if it goes up and then we'll exit. Like where should you buy the dip, sell the peak? You're really trying to game that out. But I wasn't thinking about it as money, which is how I think about it now. And I had there's a couple of nodes to this sort of journey. But at the time, it was very much a gambling thing, roll the dice, let's see what happens, combined with that technology side, which is to say the idea of a blockchain or the blockchain or Bitcoin's time chain. That was really fascinating to me, as well as once smart contracts became, sort of another, sort of a parallel track. I was really fascinated by that. And from about 2018, by the way, I got in, and like 2 months later, the entire market crashed, and I literally didn't look at any of my accounts on the whatever exchanges I was using at the time. I didn't even get anything off onto a wallet or anything. I wasn't that deep. But I stopped thinking about it altogether. But the technology side of that, instead of the gambling side, started to take my interest. And even at Slated, we were thinking about maybe there's ways to use not explicitly blockchain, but what we ended up calling Web3. Maybe there's some Web3 technologies that we could use at Slated to help people trade in and out of positions within a given movie, right? If you invest $1 million into the movie, you're stuck until and unless the movie gets distributed and starts to cash flow. But if there's a way to trade in and out of it and you can enable that, that would be interesting. And on this note, we didn't go hard down the path that Slated, but we were thinking about it very seriously. But in that crypto winter, and I've been around for a couple of them now, that crypto winter basically froze everybody's interest out, which is to say there was no interest in it, and we stopped thinking about it for a while. So then cut to, I think it was early 2022, if I'm remembering correctly. That's probably it. Um, there had been a nice big run up in crypto as well as Bitcoin. I logged back into those exchanges, and lo and behold, what had gone from X to zero, pretty close to zero, was now worth 4 or 5X. And I was like, oh my gosh, like this is amazing. That idea though of like buy it and hold it and forget about it actually is really infused into my soul now because again, of course, we had a crypto winter a couple of months later. I was able to pull, I sort of got all of my stuff out that I could and, use the proceeds of that to buy more Bitcoin and to do a couple of things in real life. That was nice. But then, okay, so this is another sort of lesson that I learned through this process. I did the thing that so many people did in that period of borrowing it, being on those exchanges that would let you borrow to buy more Bitcoin, and I just levered myself at, pretty much as far up as you could. It wasn't a crazy number, but it was meaningful. Started with a not incidental, but not going to make me lose sleep at night number. Ended up being a pretty big number, and I felt really good about it. And then I can't remember whether it was Terra and Luna blowing up or if it was literally FTX. One of those, I think the Terra and Luna stuff ended up with this really. It wasn't literally a flash crash, but it was really fast, and I got liquidated as so many people did, so right back down pretty close to zero. So that was another lesson in don't think of it as gambling, etc., right? Because that was sort of the essence of that. Why do you leverage? Because you think you're going to be able to continue to have that number go up, and at some point you're going to come out of your position, pay off the leverage and get back to zero. That's what my intention was. And the point of spending this much time talking about that is that was my big wake up call. I would not say that I was orange pilled until after that second experience of writing it up and writing it back down. And about then, when I got into Bitcoin, one of my really close friends, Terrence Michael, who's this terrific guy, terrific author, another advisor with the Bitcoin Advisor, he had gone on this really deep journey into Bitcoin. What was it? And then all of the stuff around that. What even is money? And how does the system work? How do we think about it? I hadn't thought about it at all. The thing that a lot of us say is the money that you have in the bank, it's not your money. It's not yours. It's not in the bank, and it's not even money. That is something that Terrence's book, Proof of Money, really gets to the heart of. And I was really inspired by that. He, like I said, we're very close friends, and he was writing that book as this was happening, and we started talking about it in detail. And in short order, I was full orange pilled. And that's where we are today. So as I left Slated, like I said, I've been consulting, and as I was getting more and more orange pilled, I started thinking about, well, how can we use Bitcoin to enhance the things that we're doing in whether it's in real life or as entrepreneurs or certainly wealth generation and wealth management going forward and passing it on to the next generation. I think about my daughter specifically, but also I think about my parents and my in-laws. There's a lot of touch points here where, if managed well and seizing the opportunity that's still right now, we're still early. Like everybody else, I believe we're incredibly early, but we're also far enough along where the gambling aspect of it and what even is Bitcoin and could it go to zero? I believe that is well and truly in the rear view. That specifically since the ETFs launched last year, we're in a position where it's not going to zero. We'll have drawdowns and rips for the foreseeable future, but I think it has been infused into the global infrastructure enough that we're in good shape. And now it's time to sort of think about it as a tool and think about what happens in 5 and 10 and 20, 50 years down the line.
Yeah, I agree. We have passed that. Hopefully, we've
Yeah.
passed that. Not
Escape
going back.
velocity is
Yeah,
one way to think about
exactly.
it, right? Yeah.
That's right.
Yeah, knock wood. I mean, there to use the space analogy, maybe there's some asteroid coming, and there could be some combination of events that set the whole sector back. But I think if that happens, it would have such a huge impact on the world at large, on global markets, that it would be a systemic problem across the board. And if anything can survive that, it's Bitcoin because of its nature.
Yeah. And so many of us are in this for the long run because we see Bitcoin as bringing a better world. It's based on truth, it's based on digital scarcity, it's based on being decentralized. Whereas the other system, even though we have now a pro Bitcoin administration and a lot of positive things happening with the Bitcoin strategic reserve, we know that we are on a fiat based system and a debt based system. So, how do you see this playing out over time?
Yeah, it's really interesting. So as we're recording this, a couple of things have happened in the past week or two that are worth sort of bringing in because it affects how I'm currently thinking about it. One is a terrific interview with the new Commerce Secretary, Howard Lutnick. He sat down with a couple of the All In podcast hosts a week or so ago, and it was very interesting and sort of instructive, both in terms of whether you love him, hate him, like him, neutral, President Trump is a particular guy, a particular individual, and Howard has known him for a really long time. So that part was insightful. But specifically with regard to the strategic Bitcoin reserve and the debt component, because that's a big focus of his, as well as the Treasury Secretary's focus, is figuring out how to get a handle on the debt. I'm very encouraged by what I heard Howard Lutnick talking about in terms of generating more, let's call it revenue. It may or may not be the correct term for at a nation state level, but generating more revenue to offset the deficits that we have been running. There's a whole discussion of what Elon and Doge have been focused on, basically, and without getting into I mean, again, as we're recording this, it's crazy the amount of vitriol that has been pointed toward Elon Musk and his companies. But that aside, like without getting political about it, just saying the idea is cut the deficit by $1 trillion and raise revenue by $1 trillion so that we can balance the budget. I love that, and from what Lutnick was talking about, that seems doable. Like, his confidence in being able to do that. First of all, it was infectious, and I'm willing to believe that we can get there. Let's see, another thing that happened in the just yesterday as we're recording, GameStop announced that they've gotten approval to include Bitcoin as a treasury reserve asset, which matters for a couple of reasons, not the least of which is they have something like $4.5 billion worth of cash sitting on their books. And I think that's mostly invested in treasuries or something like that. So the expectation is that there will be a significant buy happening. And then the question mark is what they intend to do with that. Like, how much of it are they going to put in there? What do they intend to do with it? Is it go down the strategy path that Michael Saylor has pioneered to turn it into, to some degree, a Bitcoin bank? That's to use really broad terms. That's all up in the air. So no one quite knows what the strategy is going to be there. But it's a again sort of this not. I don't love using the bull versus bear dichotomy in terms of outlook, but it's a signal that Bitcoin is here to stay along and both of those signals. That's the essence, I guess, of what you're of the question. It's really, really strong signals that Bitcoin is going to be an increasingly important component of companies' balance sheets, of state balance sheets, and therefore should be part of every investor's portfolio. And then, we haven't talked about this, but one of the things I'm working on is sort of how do we use Bitcoin in the context of film finance? Use it both as security for a fiat loan to pay for a movie, but there's also ways to build Bitcoin into the entire endeavor, which is to say, have it be part of the asset mix that is securing that loan in the first place, and then on the revenue side, have Bitcoin be flowing back to the investors or to the stakeholders in that given movie. The point of getting that granular, even though that wasn't that granular, but the point about laying that out is I think we're going to get to the point where using Bitcoin as security for fiat investment that generates more Bitcoin acquisition, I think is the next phase that we're going to see. Until we get onto a full Bitcoin standard, which I don't see in the short term. If you have different thoughts on that, I'd love to hear them. But it seems like for the foreseeable future, we're on a fiat standard, and the opportunity is to use the difference between the security inherent in Bitcoin and the, let's call it, the expansive nature of fiat currencies to arbitrage that, those two things to stack more sats. That's the thing I keep thinking about. Like, the point is to bring new things into the world, not just have your Bitcoin sit in a vault and roll over and get passed to your family. We got to do that too. That's an important component. But at the end of the day, what is money for? It's everybody will have a different, list of things that money is for. For me, one of them is bring new things into the world. And I have this sort of entrepreneurial mindset. I love the idea of bringing more movies into the world, bringing more startups into the world, using the security inherent in Bitcoin as a tool to facilitate and lower the risk of new endeavors. That's the thing that gets me really excited. And again, I sort of focus on these areas that I have this couple of decades of experience in, but you can apply that to everything from startups to farms to like whatever the thing is you're into. Art, right? Like you could patronize artists and bring beautiful new things into the world. There's no end to this, and that's the thing that I'm most excited about. And the fact, just to land the plane, the fact that the US has made good on the campaign promises of establishing the strategic Bitcoin reserve and encouraging and enabling the Commerce Secretary and the Treasury Secretary to find cost neutral ways to add Bitcoin to that strategic reserve, I think is super exciting. And again, this bedrock for us all to be able to build upon.
Yeah, you made some really great points there. The point about using our Bitcoin is, I always go back to what Jeff Booth says, because he says that if Bitcoin fails as a medium of exchange, it'll fail as a store of value. So it's
Mm,
really important that we get to the point of using Bitcoin. It's being used all over the world. We know that
sure.
with
Yeah.
Lightning and other methods. But in the US and in the Western world, we tend to store it more, which
Yes.
is a great thing. You know,
Right.
I also loved that Howard Lutnick interview because it was so informative. And I guess just my question was, even though many positive things are happening, it's still a fiat system. And Bitcoin is going to be the better choice long term. Even though it's great that companies are buying, it's great that the US government and other nations will start stacking. As we know, everything falls when priced in Bitcoin.
Absolutely. And that represents an opportunity in the short term. Like I mentioned before, I mean, I think about it a lot. And in fact, I've had discussions with colleagues about Bitcoin loans, where you're using your existing Bitcoin to take out a loan that is denominated in Bitcoin. That's really exciting in and of itself. Um, I hesitate to use the word but I guess it's sort of how I'm thinking about it right now. But what makes me personally more excited is to use Bitcoin as security for a fiat loan, deploy the fiat in ways that pay for the expense of the loan and generate more Bitcoin, which is to say, stacks more sats through the process of paying back that loan. So the easy example is a house, right? And it's easy because they tend to be long-term loans, the fiat version, and it's a single asset, and it's either going to go up or not. But over 30 years, which is the normal thing, they tend to go up some amount, right? And then when you sell that house, whether it's at the end or any time through that, you're paying back the loan, and hopefully you'll have some profit on that. That was, when I bought my first house, we were lucky enough to sort of take advantage of the run up into the global recession. I saw both sides of that, where we took out a loan, bought a house, it went up basically 100% in 4 years. And then we used the proceeds of that to buy our next house, and that was really useful. And then that ended, in tears during the global recession. That story is more about the scar tissue, again, sort of, informing my worldview. But back to Bitcoin loans, the idea would be use security to to have a fiat loan that buys the house, and then at the end of that, you're paying it back in fiat. Basically, the profit is you can get piled into Bitcoin, and there's ways to make that interesting through the process of mortgage repayment and all that. And I don't mean to get into the weeds, but my point is that until we're literally on a Bitcoin standard, using Bitcoin in the context of the fiat standard represents this giant opportunity. Um, so yeah, I'm totally blanking on the company that announced this like 6 months ago, but there was a commercial real estate deal where they basically lent money to buy or sort of refinance this commercial real estate property. And part of the terms of the loan was to buy a significant amount of Bitcoin as an additional element to the loan. So just to use round numbers, $10 million to buy this commercial real estate, but the loan is going to be, I think it was 10% more. So $1 million worth of Bitcoin. So an $11 million loan that gets paid off in the normal time, but the Bitcoin gets bought at the very beginning, and you get the compound annual growth rate effects of Bitcoin alongside the value rise, hopefully, in the property itself. And mortgage payments are made all along. At the end of the term, the loan is paid off, the Bitcoin has appreciated, and the basically the way it works is the Bitcoin gets paid for by the borrower. That's their Bitcoin, but the appreciation goes to the lender alongside the repayments. And so if you think about that, it's really inspiring. It's, you don't have to be a genius to know how I'm thinking about that in terms of film finance. But what's awesome about that is it's not just use Bitcoin to buy something, it's use Bitcoin to acquire more Bitcoin at the beginning and to take advantage of the power of that. And at the end of any given deal, you have a borrower with more Bitcoin in this case, and the lender also has increased their stack. Sometimes, if you don't mind me just riffing for one more step, when I brought this up to a couple of friends, they're like, "Well, why not just buy more Bitcoin? Why is the lender even bothering if they have all this fiat? Just buy more Bitcoin." And that's a reasonable thing to say, but the reality is that many financial institutions, whether it's a private equity group or a family office, or they have rules around how much of their portfolio they can put into certain sectors. And there are plenty of firms, plenty of companies, whatever the entity is, that have already maxed out what their internal controls allow them to within Bitcoin, and they have fiat that they have to deploy somewhere. And if you can do that in a way that within the rules stacks more sats for them, I think that's a really elegant and exciting proposition.
Yeah, very creative.
Yeah. I didn't invent it. I just I look for good patterns, and that seems like a good one. And if we can apply it in the film finance realm, it has a huge amount of potential. So I'm excited about that. I have a good model, and I don't have all my ducks in a row yet, but I'm very excited about that as a tool going forward through the rest of this year.
Yeah. And you obviously love your industry, like you mentioned.
Yeah,
So you want to
that's right.
stay in that industry and include Bitcoin.
Absolutely. Yeah, without getting into the details of any given financial product, just to sort of talk about what's possible, like, blue sky it a little bit, just to back up a little bit. So the way independent film finance works is you have different, basically you're selling the best way in for total newbies, right? Is you make a movie and you sell that movie or license that movie in territories around the world. That's the way, basically, that's the way the Hollywood system works as well. They make a movie, they put it into theaters. There's a lot of stuff they own, but in territories where they don't own the distribution apparatus, they're licensing it to other people. So this is essentially a business to business transaction, even though the surface area of it feels very much a consumer oriented thing. You're making this movie or this TV series for an audience, and the audience is paying for it in some way. But the real underpinnings of the finance side of making the movies and series is a business to business licensing thing. So with independent film, generally someone is making a movie. The simplest version is, your rich uncle writes a check, you make the movie, and then you need to sell the movie. Or specifically, to be really specific, you want to distribute that movie. So distribute, buy the rights to put it into whatever theaters, on streams, and that's all around the world. There's hundreds of markets all around the world. The largest one is North America. There are about 8 or 10 other quite large markets, and then you get sort of this idea of the rest of the world. So to come back to independent film, generally what happens is you have a sales company that is in charge of selling the rights to a given movie into all of those other territories outside of North America. And then you have most often it's a different sales company that is selling the rights in North America. And what happens through that process is literally you have sales contracts. And when you have those contracts, whether the movie has been made or not, you can borrow against those contracts. The buyers are generally known to lenders within the space. And you can say, I've got this deal from Netflix for the world, or you could say, I've got a deal with Warner Brothers for North America. And then we've got all these sales contracts in all these different areas. And the total amount of those contracts equals, pick a number, it could be 80% of the budget. Um, Lenders will give you some percentage of that based on who those buyers are. So it could be, say, 70% of 80% of your budget you could have a loan against. So that's the debt side. Another component is what we call soft money. So there's tax credits in different places. So if you go make your movie in Romania or Georgia here in the United States or Canada, there are tax rebates and tax incentives that you can use again as a contract and borrow against, which you can use to make your movie. And then generally, I was being a little rosy with some of the international sales numbers there. Generally, what you're looking for is about 50% of the budget to be covered by your international sales, about 30% covered by the tax credits. But keep in mind, even that 80%, you're taking a haircut in terms of how much money you can borrow. That's your money, but you can only borrow against so much of it. And you end up with a certain amount of money at the bottom, which we often refer to as equity. But basically, it's unsold territories because the picture I just painted doesn't include selling in the United States. The United States is the biggest market, and if you were able to sell it to a distributor in the United States, it generally speaking would cover all of that equity piece at the bottom. But most of the time you're selling to the studio in North America after you've made the movie. That's the challenge. So what do? You have somebody who invests in the movie. They own a piece of the profits or the proceeds of the film, in addition to the bank that's lending against the soft money and the international sales. So that's basically the way it works. You have this debt, you have soft money, which is also you could think of as debt, and then equity. Well, the risk to the equity investor is, will this movie get distributed in the United States? Or to put it a different way, if it doesn't get distributed in the United States, then you're really beholden to the performance of the film in the non-North American territories. And most movies don't overperform the contracts, right? The buyers are very sophisticated. The sales agents know as well. You have to assume that you're not going to make more than those contracts, period. So if the movie doesn't get distributed and you've invested your money, let's say again for round numbers, and cut me off by the way if you think this isn't interesting to the audience, but I find it fascinating, obviously. Um, if you have a $3 million budget and you've got about a million covered, 2 million of it covered in those two first chunks that I talked about, and you have $1 million in equity, that equity investor is either going to make his or her money back if it gets sold to a distributor or not if it doesn't. And it's a pretty big risk. If you throw Bitcoin into the mix, similar to that real estate concept that I just pitched, if in addition to financing the film, let's say instead of $1 million, you're loaning two, $1 million gets spent to complete, for the movie, right? The movie is fully financed now with that million, and there's a significant amount of Bitcoin that's bought alongside it. That Bitcoin becomes part of the asset mix of the movie, right? So in addition to the rights to the movie when it's done, your licensing, you also have this Bitcoin that sits there. As the Bitcoin, it takes several years to make a movie, basically. So the low time preference aspect of Bitcoin really aligns well with film in that from the time you say, I want to make a movie to the time you shoot the movie can be how long is a piece of string? Like it can be many, many years. But let's say for the sake of argument, it's about a year to pull the money together and 6 months or so to get ready to shoot the movie, some amount of time to make the movie and some amount of time for post-production. And by the time you deliver the movie, it's usually not the day that you're putting it into theaters, right? The release date. You've got these chunks of time that align pretty well with a full epoch for Bitcoin. So compound annual growth on the Bitcoin that gets bought when the movie gets financed can be pretty meaningful. And so if you bake into this structure that the Bitcoin's not going to get sold or disposed of, you don't want to sell your Bitcoin, right? But the Bitcoin's not going to get disposed of till a minimum of 4 years. you're harnessing the value or the potential compound annual growth of the Bitcoin that can fully pay back that $2 million that got loaned by that investor. Does that make sense? So
Yeah.
the risk here is covered by the Bitcoin that gets acquired and either pays itself back if the movie doesn't perform well, or the movie performs well and they have this Bitcoin. And again, the investor is paid back because of the proceeds of the film and the appreciation of the Bitcoin. It aligns very well with that commercial real estate model that I talked about.
Yeah. And with the 4 year time frame, because of volatility of Bitcoin, if you bought at the very height, 4 years would give you enough time to recover it.
Exactly.
However, the investors might have a bit of a heart attack in the meantime.
Yes. Well, and that's the challenge, right? So the investor would, it's a really specific thing. Like, threading this needle is, I'm already anticipating it being a challenge, but you would need an investor who is willing and interested in investing in movies in the first place, and also is a Bitcoin maxi or is a Bitcoiner, right? What I'm looking forward to is convincing them that this movie is the one to choose, not so much should I invest in a movie, nor what do I think is going to happen to Bitcoin over the next 4 years? We need somebody who goes, oh, that's going up, like whether it's whatever, 10% or 25% or one of the bigger numbers that we've seen periodically, through the cycle. Having somebody with conviction around the trajectory of Bitcoin is going to be part of that. And whether that's a financial institution or an individual is going to be the work that we do over the next couple of months to sort of pull those pieces together.
Yeah, it's going to be very interesting. I want to go back to your Bitcoin journey just because you talked about going in gambling and the need to gamble on crypto. Was there a time where you thought that you needed to get ahead, or was a different mindset driving your decision?
Well, it wasn't like I'm going to roll the dice and I'm going to hit, hit a seven and, double my money. It wasn't like that. It wasn't gambling that sense. It was more that I didn't see it as investing. Right. So working backwards though. So the way I think about Bitcoin now is similar to the value investing idea that that everybody knows, right? The Berkshire Hathaway, Warren Buffett thing of buy low, sell high, but hold for the long term. You don't intend to sell it. And also if you buy one share, you got to think about it like you're buying the whole company. That really has resonated for me. And so whether that's Apple or Nvidia or one of the big seven, Bitcoin itself, the S&P 500 itself, there's a lot of ways to think about that and having a long-term view, low time preference. So when I think about gambling, I think about it in the context of that. So as opposed to a low time preference, a high time preference. Like I'm at the time, the mindset was, oh, I don't even remember what the coins were, but let's just use, it wasn't so much Bitcoin. Bitcoin seemed, was already sort of its own special case, but let's just use ETH. Like as Bitcoin goes, like the whole crypto market goes up as well, and ETH is the next best thing, and it's gonna rip. And so let's get in now. It's whatever. It's at its 52-week low. It can only go up from here. It was very much that mindset. I wasn't a student of it. I had no insight into the technical underpinnings of any of these things. I'll tell you one thing that I didn't know, and I'm shocked how long it took me to understand this. It was 2022 at the time, I think, when it finally clicked, is the sheer volume of ETH that is held by the foundation. And I put, foundation in quotes. I'm not a hater. I don't mean it like that, but it's a huge percentage, let alone Ripple and XRP. Just the volume of those tokens that could get dumped at any time, theoretically, as opposed to Bitcoin, which can't because of the math and the way it works, proof of work.
And there's no leader.
Well, exactly. Well, yeah, we could go very long talking about, waxing enthusiastic about the elements of Bitcoin that make it pristine collateral. But just to stay with the gambling aspect, it's really dumb in retrospect. Like there were reasons to think that some of that stuff would go up, and it certainly did. And as I said earlier, it went up and then it crashed down. But then 4 years later, it had gone back up, right? So it wasn't insane, but you're definitely playing in a rigged game. The house always wins is something to keep in mind because so much of those tokens could get just dumped on the market at any time. Even if a game theory approach would keep people from dumping tokens on the market, every time you hit some sort of all-time high, you're getting new supply getting sold in that's coming essentially out of nowhere. It's not literally printing money because everybody sort of knows it exists, but it functions like that in that the supply expands and drives down the price. So that's why I'm a Bitcoin maxi now. But at the time, it was definitely literally, well, figuratively going to a casino and let's play craps. Let's see what happens. Even if there craps, you can get to a point where the house's edge gets really, really narrow. There's probably lots of versions of that within the crypto sphere that are reasonable ways to go. It's not a me thing, but I don't have any judgment about people who like to play like that. But it was definitely gambling, and it still is, as far as I'm concerned. Actually, to tie that back to something else we talked about, I think it's notable that the US does not have a strategic ETH reserve. They instructions in the executive order was hold your Bitcoin and acquire more. And then the stuff that we have that's not Bitcoin, figure out what to do with that. Do the correct thing with that. But it's not acquire more, and it's not have a reserve and never sell it. Reading between the lines, it's like get as much as you can for it when it seems like the right time to do that, which I was really encouraged by. Reasonable people could differ with my sort of neutral opinion, is all I was trying to suggest there. But it strikes me that those voices, heard or not, seem to have not affected or to have led to what seems like a pretty reasonable and even wise path. And time will tell. So we'll see where we end up with over the course of the next couple of years.
When I spoke to Terence Michael, he was telling me that it's really hard to afford a home in Los Angeles for even people in the film industry. And so that's why I was thinking some people might need to gamble. And many of us all over the country sometimes have to put our money in the stock market or in altcoins because we think it's going to go up more than our money's going to be debased. And I just wondered if that was part of it.
Well, it wasn't explicitly part of that for me at the time, because at the time I had the joke in the entertainment business is a straight job. The entertainment business, there's a big chunk that is W-2 oriented paycheck type work, but every individual movie is built by independent contractors, 1099 type people. And so what Terrence was talking about within the entertainment business, the difficulty of buying a house is not just that houses are expensive and the supply is really low, and such a shame what happened with the fires in those particular neighborhoods. Supply goes to zero. It's just awful. Sorry, like I have pictures in my head of those realms here as we're talking about. That just happened a couple of months ago, so it's still sort of top of mind. But to get back to center here, the difficulty is if you don't have a W-2 to show a bank, it's really difficult to get a mortgage in particular. And so one of the things that Terrence has specialized in over the past for quite some time now is helping 1099 based people get a mortgage. And so with regard to the gambling aspect of it, yeah, I definitely was thinking like everyone does. Well, I'm not literally putting whatever $1,000 on red on a roulette table. Um, I think I have better chances for it to go up and go up significantly in a relatively short time frame than that. And that would be good because the more assets I have, the more I can point to the bank that'll let me borrow more money, that sort of thing. That definitely sort of is sort of baked into the way I was thinking about it. But the scope of it for me was more, if I put 5 grand here and it ends up being 25 grand, we can go on a nice vacation to Tahiti. It was more like that rather than that's going to be a down payment on a house. Because again, back to the LA thing, I don't know what the average house price is today, but it's probably north of 600. Like I literally don't know what it is. And that's like not even in a particular neighborhood that would be convenient to all the things that I do. I think, if you could find a house for less than $1 million that is less than a 45-minute drive from one's place of work, you're in good shape. But what that requires is 200 grand. And so, if you're talking about 5 grand here and 10 grand there, it takes a lot of bets to go 5 or 10x to get to 200. I just never thought of it as a viable way to build a nest egg. And again, that's back to that's back to that difference between a long-term mindset and a short-term. That when I think of short-term, it's more gambling. It would be great to, hit the lottery, so to speak, and have it be nest egg size, but I never expected it to be that.
Yeah, that's a good explanation. Besides your house, do you invest in MicroStrategy or other companies besides
These days
Bitcoin?
I these days I haven't. Nope. Not that I wouldn't. It's just that, having been in startup land so long, and now as a consultant where, get chunks usually depends on the engagement. But I'm not, it doesn't feel like mining fiat, so to speak, where you have a weekly, bi-weekly, monthly paycheck. It's more of a more it comes in chunks. So just the way my financial life is set up, no, it's like all Bitcoin aside from, day-to-day stuff. And I don't think it'll always be like that. I think I'm definitely not well, let's put it this way. If I had money to invest in a startup right now, that whether it was my own or somebody else's, in a way that would be meaningful to get that company started, I would do that. And that is definitely not the same as hodling Bitcoin, right? That's a high risk situation. But to the essence of what you're talking about in terms of investment, my goals are to be able to retire comfortably at some point. And by the way, that number, I don't actually have a plan to retire. Like the way I really like what I do, and I feel like as long as my brain is sharp and my relationships are good, and I'm, doing the work to stay abreast of everything. I can do a version of what I'm doing kind of indefinitely, but at some point that will fade, and I'll want to be able to not have to worry about money. And I'm not quite at the don't worry about money phase, but I can, it's within reach. Let's put it that way. And then the next thing is to make sure that my family is taken care of when I'm gone, and that they have whatever resources they need. So set it up in a way to be steady and be the bedrock, the financial bedrock. And once that is sort of sufficient on the Bitcoin side, then I'm a fan of technology companies and, like I said, startups. And there's a lot of stuff that I'm open to. But right now, the smartest thing that I can do is stack my sats as high as possible, alongside the sort of entrepreneurial stuff that I do both for myself and for clients.
Yeah, that makes a lot of sense. I am moving more towards Bitcoin because, yes, I do have some in the stock market. And, for people who have in retirement accounts, then you've got to consider those other options. But I do think that having only Bitcoin is much more simple and maybe
Yeah.
peaceful because even
Yeah.
MicroStrategy is quite volatile. Volatile.
Yeah. Well, I mean, there's a totally reasonable case to make that, and I sort of like I basically was adjacent to it just now. Having the simple, reliable core of your portfolio be Bitcoin just gives you that peace of mind, right? I mean, at some point, maybe the cycles start to change and the compound annual growth rate over, from 1 year to 4 years to 10 or whatever, maybe that starts to narrow in a significant way. But right now, it's by far the well, just to take a pause right there, it's volatile. The price is volatile for sure, but it's not risky. That's something that Peter Dunworth with the Bitcoin Advisor says very frequently. Bitcoin is not the risky asset. And so having a very healthy compound annual growth rate with a low risk asset is the smartest thing to do. And so just, set it and forget it is very compelling. And yet, like you alluded to, I'm enthusiastic about what strategy is doing, what Sailor is doing. And there are times when the stock price of strategy, or, master is how Terrence says it, that stock price is sometimes very expensive relative to its net asset value, and sometimes not quite expensive. And because it can continue to take care or to take advantage of the money glitch, it makes sense to get in at some points. And then another, I still think that that's probably a buy and hold situation, similar to Bitcoin itself. This is, by the way, I'm not like investment guy. Like I sort of am. Like I'm knowledgeable enough to have a good conversation, but advising, financial advisor is a different thing. But in just sort of the personal level that we're talking about, it can be exciting to get into something and see that you have an opportunity to get in when something's really low. Another example would be, excuse me, last week as we're recording, the markets really dropped pretty precipitously over the course of several days. And then a couple of days ago, markets ripped, and so Tesla, for example, dropped like I don't know what the total amount was, but it was, compared to where it had been, it was a relative bargain. And then, you could take advantage of or you could sort of think, well, I think that I'm long Tesla, and that's a good buying opportunity. That's a totally reasonable thing to do. That feels more like it's halfway between, in my mind, gambling and investing, meaning like Bitcoin hodling. It's sort of a trading thing, right? So if you have some percentage of your portfolio, it's Warren Buffett style, but on a smaller scale, right? If you're going to buy something, I think his rule of thumb is he has some way to value a company, and if it's at 50% of that value or lower, he buys it. And then once it gets to 150% of whatever his sort of rolling valuation of the company is, that's the time to sell. I think that's a totally reasonable thing. And, you certainly can't argue with the success of Berkshire Hathaway applying that over and over and over a long period of time, probably alongside some other strategies. But anyway, that's where I go out of my depth. But I think, it makes a lot of sense to have a chunk of your portfolio so that you can trade because, compound annual growth is one thing. Uh, doubling your money over the course of a small-ish period of time, whether it's 6 months or 18 or 36 even, that's compelling as well. And so I don't begrudge anybody doing that. And if I ever get to the point where my portfolio is large enough to accommodate that, then I absolutely would do that. I do think it takes a certain amount of time, though. And this gets back to what you said about sort of the peace of mind with Bitcoin. You're not thinking about it all the time. You might glance at the price on a daily basis, and some days that can, be stomach churning. Other times it's, you think you're a genius. But it doesn't require a ton of research and tracking the market and worrying about the candles. You just buy Bitcoin, stack the sats, and move on.
Yeah, it sounds quite peaceful. So,
Yes.
on that note, tell us how Bitcoin has changed you.
How Bitcoin has changed me. That's a great question. Actually, I'll twist the answer a little bit. I really like that there's that cliche because it's true, in my experience, is that when the student is ready, the teacher will find you. I feel like my getting orange pilled a couple of years ago, sort of really leaning into it and really being able to see it for what it was or what it had become. I wasn't ready to get there until that point. And that was a combination of age maturity, financial maturity, entrepreneurial maturity. I kind of had to go through the steps that I went through, given where Bitcoin was at the time in terms of its own evolution or expansion, whatever word you want to use. I don't think I was ready to get there yet. As we talked about earlier, Terrence, for example, it's almost sometimes he can see around the corner of things and he goes and he sees what's coming, whether it's a neighborhood that is about to go through gentrification and he jumps in and does a development property. He's done that a couple of times. He could see what was coming down the pike with Bitcoin way, way earlier than I was able to. And so to get back to the core of your question, how has it changed me? I feel like I was changing through the experiences that we've discussed over the past hour and sort of met my understanding of Bitcoin separately sort of was maturing to the point where it really sort of boils down to that idea of a low time preference. It's not a get rich quick thing. It's not gambling. It is the best savings technology ever invented and should be used as such, as savings and then as security for to do other things as well. And so it's a level of sort of, I don't know if this sounds weird or not, but I feel like I wasn't sophisticated enough to see it until now. And I kind of am sophisticated enough to see it where I can see it as part of a pattern, not a culmination, because I have a whole another chapter or two ahead of me professionally, but I'm finally in a position to be able to see it for what it is. And at the same time, Bitcoin has gotten to the point where it really is becoming the tool and the pristine collateral that so many people have known it was going to become way before I could see it.
Yeah, you make me think of somebody on one of my podcasts says you get Bitcoin when you're ready for it.
That's right. We all get Bitcoin at the price we deserve, something like that. That definitely resonates for me as well.
That's a little harsh, so that's why we
Yes.
say you get
Well, I know.
Bitcoin when you're ready.
That's right. Exactly. I have, just in my nature, I've never been a guy who dwells on the past. So, for example, I've never done them. I've never gone and looked up how much Bitcoin I actually purchased back in 2017. nor the price that it was and what it would be today. I haven't done that. I haven't tried to figure out, oh, if I'd only known to avoid those other the other stuff that I bought and only focused on Bitcoin, what would have happened? That's just not the kind of person that I am. It's just not, I'm constantly looking forward. I want to take the lessons that I've learned through both scar tissue or through luck, everything from relationships to finance to companies to whether it's politics or whatever. I love looking forward rather than looking backward. But I do appreciate the fact that I have the scar. I know that if I had made some other decisions, my financial picture would be significantly different than it is now. And that's fine. Like I sometimes, in the spaces stuff that everybody does, but that I've been doing for the past 6 months or so. I'm aware from back channel conversations that a lot of the people in those spaces have really, really heavy scar tissue around really large numbers of Bitcoin that have either been stolen or lost. And I don't have any, that would probably keep me up at night, even with my only look forward nature. I don't have anything even close to that. So I feel like the lessons that I've learned, Bitcoin school, so to speak, has been relatively inexpensive. And I feel like, now that I have that arrow in my quiver, I want to make sure other people do as well. The education component that the Bitcoin advisor does is crucial. We'll talk to anybody about what we do, why it's important, give advice around what they're doing, and then if they would like us to hold a key, it's a fee-based thing, similar to what wealth managers or accountants and lawyers get paid in terms of having. Basically, it's a fee-based thing, but there's tons of stuff that we do for free, and we just love talking to people about the way we see the world, why multi-sig is important, how to protect yourself and your wealth for future generations. And I feel like, to get back to how has it changed me, it's sort of opened that side of my personality up as well. You probably can gather there's a little bit of Professor Jason sort of lurking behind me as I'm talking about how film finance works, for example. I sort of have that same energy around Bitcoin, and I might not be as technical as some people. I'm not the guy to talk to about how mining works, but I do know why Bitcoin's important, how we can interact with it today, what the best way to sort of hold on to it for the long term is, and I love talking to people about it.
Yeah, you have wonderful energy, and I love that.
Oh, thank you,
Looking forward, not looking back. That's all we
thank
can
you.
do. We can't change the past anyway, right?
That's exactly right. Exactly right.
Well, tell us where people can find you, Jason.
Well, that's a good question. Let's see. So I'm on Twitter. I'm pretty sure my Twitter handle is J Scoggins, first initial, last name. And I'm at the Bitcoin Advisor. My email is Jason at the Bitcoin Advisor there. I'm pretty accessible online. If you just look up Jason Scoggins, the Bitcoin Advisor, it'll pop right up. My DMs are open and I'm happy to talk to people about what I'm up to. Happy to talk to people about the film finance stuff that we talked about. Just whatever. I'm, part of the community. I love being part of the community. And I really appreciate you having me on today, Paula, and giving me an opportunity to chat with you.
Well, thank you so much for joining me.
It's my pleasure. Thanks again.